Let's talk with David Busch. He is the co-CIO of Trajan Wealth for his perspective on today's price action and how investors reacted to the expected cut in interest rates. Welcome to the show.
Thank you so much for having me.
So we're right about at all-time highs here across several of the indexes. What do you make of not just the expected cut from the Fed, but how investors have reacted in the 2 hours since?
It's as anticipated. Essentially, when the Fed cuts rates, it acts as a tailwind for risk assets. So the S&P 500, Dow, even small and mid-cap stocks are likely going to catch a good tailwind here.
Yeah, did everything you heard from Powell today closely align with your expectation? I got to ask you about the dissenters, because we had 3 dissenters, but they're not all on the same page as one another. In other words, they're kind of fighting this decision for different reasons.
That's right. So what Powell stated in his press conference is that they're all aligned in terms of that they need to fight inflation, but they're also concerned about the unemployment rate. So with the labor market softening, they agree that they have to do something, but essentially they choose different paths, or they voted for different paths. So the 3 dissenters, 2 no change in rate cuts, and 1, Mirren, wanted a 50 basis point change in rates.
Talk to me a little bit more about expectations for a new Fed chairman. We've heard from the president, kind of shifting the timeline a little bit. Originally, we were going to get the new Fed chair announced before Christmas. Now President Trump says it might come a little bit into January. I'd expect that person to be a bit more dovish than some of the more moderate voices on the FOMC.
I would agree with that. I mean, if we just look at Stephen Mirren, he's very dovish. And so I would expect that anybody that President Trump puts forward as the new Fed governor is going to be very dovish as well.
How are your expectations for the Fed to make these decisions when they like to say they are data dependent, but as you know as well as I do, reliable government-based data has been very tough to come by given how long the historically long federal government shutdown was?
That's right. So, and Powell actually admitted to that today. He said that the data just wasn't coming in on time, and so they're basically flying blind in a lot of ways. And I know that they have alternative metrics that they're following. But essentially, I would expect, right now we have 1 more rate cut priced in for 2026 and 2027, 1 in 2027. So I think that they're going to remain data dependent and on a wait and see approach.
Talk to me a bit more about what sectors or parts of the major markets you'll be looking for to catch a little bit of a tailwind as we continue to ease on interest rates.
I know that valuations have been a concern, specifically with large cap tech, the Mag 7. I think Mag 7 and large cap tech is going to catch a tailwind. But I'd also caution investors to consider balancing that risk with a value-tilted, dividend-oriented approach as well, because that'll help offset some of the near-term risks. Look, the tech sector, there's a massive AI infrastructure build, and we've seen those CapEx numbers come in. And from that perspective, we'll see some near-term fluctuations, and there'll be reactions to any headlines.
What's your thinking on the valuations debates? We haven't really talked about the AI bubble as a prevailing narrative here the last couple of weeks, but these valuations, they concern some people out there.
They are high, and specifically if you look at names like Tesla, they are high. But the question is will their earnings growth keep pace with their price, and will that eventually lead to that, the earnings part of the valuation, the PE ratio coming up? And I think it will over the long term, but in the near term with their capital expenditures, we're going to have to be very cautious and monitoring that closely.
David Busch helping us kick off the broadcast, the co-CIO of Trajan Wealth. My man, it's been great to have you here. Come back anytime.
Thank you so much. I appreciate you.
Happy Fed Day, by the way.
Happy
I meant to
Fed
say, this is
Day.
like our Super Bowl down here for Wall Street nerds.
That's
David,
right.
thank you.